Welcome back to Market on Close. I'm Sam Vidas, live from the floor of the New York Stock Exchange. It's time now for Overlooked Stocks. We're watching shares of Amer Sports rally today off the back of an earnings beat and raised guidance. So for that, I'm joined by George Tsilis, as always, senior markets correspondent, to get us across this one. So what did the report card say, and what do you make of the action in the stock as far as the reaction is concerned, George?
Well, I think obviously the reaction in the stock is quite positive. And I think if you look at Amer Sports, which actually has three different divisions, they have technical apparel, which includes Salomon brand, as well as their outdoor performance brand, Arc'teryx. But also if you play tennis or racquetball, the Wilson brand is actually part of Amer Sports in terms of their ball and racket sports divisions as well. But, you know, the stock, I looked at it, which IPO'd back in January of 2024. So it's been, almost a couple of years in terms of publicly traded. It's actually performed quite well if you consider some of the challenges that are going on in the apparel space, like Lululemon. That stock has been really underperforming in the last year. Nike as well has been another sort of serial underperformer, not just in the last year, but in the last 3 years. So there are some stocks out there and companies that are in the technical and sports apparel wear markets that are doing well. And this certainly is one of them. If you look at the report, there's a catalyst today. They did post an adjusted profit of 33 cents, which bested the estimates, which were around 25 cents. Compared to last year, that was actually 130% higher approximately to the 14 cents they published last year for the same quarter. And sales were higher, beating the estimates by 30 million, 1.76 billion, up also 30%. And it wasn't necessarily their sports, performance brands like Wilson. It was actually their apparel brands. If you look at their outdoor performance brands, which include Salomon, up 36%, their technical apparel brand, Arc'teryx, was up 31%. And with that said, the company also increased their guidance for the fiscal year. Meaningfully enough, they actually increased their EPS guidance from the midpoint of around 79.5 cents to 90 cents, as well as sales estimated to be in the high single to low double-digit teens % change for the fiscal year.
A strong performance over in China, particularly across Asia Pacific, but the Chinese market being a real bright spot for them, which is interesting because you mentioned some of these other names like Lululemon and Nike, where they've also seen a strong performance in this key market that has managed to offset some of the weakness actually that we've seen here domestically in the US. But I also noticed that Amer is actually owned by Anta, which is a Chinese company, I do believe, and this has sort of been, from my understanding, a bit of a beneficiary of a bit of a pullback in some of the US brands in China. So I'm just wondering, when you look across the space at some of the athleisure wear and some of the other brands as to what they've been doing here, I mean, how does it compare?
Well, I think first off, when it comes down to footwear, I think the footwear markets have been relatively competitive, particularly if you look at things like running and casual apparel. I mean, Nike seems to have lost its way, at least right now. If you look at On Holdings and Deckers, which has the Hoka brand, those brands have actually taken off. And I think if you look at Amer Sports, Salomon is, of course, their footwear brand, their primary one, but they're not just a footwear company, where Nike generates most of their sales in footwear. I think in the apparel space, Nike has, really lagged, particularly in the women's apparel space. But if you look at Lululemon, they're facing a lot of competition from other brands out there in the athletic leisure space. So I think the recipe here is for Amer Sports really comes down to right brands, right markets, and right marketing. If you look at the performance brands out there, there's a lot, but this company seems to be performing exceptionally well, generating estimated to be gross margin improvement. This is what the company denoted, 58% of sales above the 55.5%. by at least a couple hundred basis points, or about 250 basis points. They're also expecting operating improvements, margin-wise expansion between 30 and 70 basis points. And that's important considering the company's net income margin is only about 3.5% of sales as of last year. So here we actually see just a slight improvement in operating margins create a gearing effect or a magnified effect in the underlying stock. So I think it comes down to the right marketing, right brands, and then, of course, tapping into the right markets. So Amer Sports, for what it's worth, seems to be doing the right things to generate sales and, of course, becoming more profitable.
Yeah, it certainly is. And I mean, that chart that we just had up really tells us everything, doesn't it? I mean, that divergence between the performance here with this name compared to the Lulus and the Nikes of the world very much paints that picture. George, thank you so much for joining us today and breaking down that key name.